Prices for cryptocurrencies have been rising for the majority of 2023, driven by anticipation over the anticipated debut of spot BTC ETFs from major financial institutions like BlackRock. However, a massive sell-off last week that saw half of the top 10 coins by market size drop by more than 5% served as a warning to traders that price action is bidirectional. After U.S. Federal Reserve Chair Jerome Powell declared that the central bank will once more leave interest rates stable and hinted at the possibility of several rate cuts in 2024, the prices of Bitcoin and Ethereum started to rise by Wednesday. This is what transpired and what could occur next. Following 7 weeks of price rises, Bitcoin saw a drop. At the beginning of the week, the price of Bitcoin dropped by about 7%. It was about $44,000 on Sunday, $4,150 on Monday afternoon, and $42,000 by Wednesday. If you want to see more videos like this, make sure to subscribe and ring the bell to stay updated for more awesome content. However, a lot of market observers anticipated that the dip would be temporary. This is because long-term holders' sales did not account for the majority of Monday's decline. A significant contributing reason was short-term traders who were compelled to liquidate their holdings when the price of Bitcoin dropped. These traders had wagered that prices would rise further using leverage or borrowed funds. The liquidation of leveraged holdings worth over $500 million resulted in a sharp decline in the value of Bitcoin. The decline this week may not even be negative news for regular Bitcoin hodlers. According to some analysts, the unwinding of leverage is a positive development since it makes future price movement more sustainable. Reflexivity Research's creator, Will Clemente, stated that corrections shake out weak hands and leverage, allowing for a stronger foundation for eventual moves higher. The volatility of Bitcoin is a feature, not a flaw. The dominance of Bitcoin may indicate what will happen next. The price of Bitcoin dropped in tandem with its dominance, or BTC's percentage of the whole cryptocurrency market. Dominance of Bitcoin is regarded as a crucial crypto signal. In the past, cryptocurrencies have started to rise when BTC's dominance peaks. Indeed, the market capitalization of altcoins reached as high as $750 billion, or over $100 billion above November levels, following the peak of BTC's dominance, which reached a 2-year high of 55.3% on December 5 and started to decline. However, a decrease in Bitcoin's market share does not guarantee that prices will stay low. Alternatively, it can be that some traders have switched to altcoins and been profiting from their 2023 gains. In summary, any asset class rarely rises without interruption because, as prices rise, some traders are inevitably going to sell. Furthermore, there are grounds for optimism on the direction that markets may go in the upcoming weeks. A surge in activity from spot Bitcoin ETF applicants may be setting up an approval from the Securities and Exchange Commission, which many experts believe could occur by January, in addition to this week's data indicating inflation has continued to cool and the Fed's suggestion that interest rate cuts could occur in 2024. How to use the Relative Strength Index to guide your trading. With the volatility of cryptocurrency values, you may be considering your trading strategy more than normal. There are several approaches you may take, ranging from straightforward ones like dollar cost averaging, purchasing a set quantity of cryptocurrency each week or month, to more involved ones like delving into technical analysis to learn as much as you can about market trends. We're gathering some guides regarding the key charts and indicators you can use to guide your decisions if the latter alternative piques your interest. In this installment, we'll be discussing the Relative Strength Index, RSI, which comes after last week's tutorial on candlestick charts. The RSI is one of the most often used indicators in technical analysis. It provides a rapid means of determining an asset's momentum, or the degree to which the market has been driven to buy or sell over time. You may view RSI charts in Coinbase Advanced by navigating the Indicators drop-down menu at the top of a price chart, either through the Coinbase app or coinbase.com. How does one compute the RSI? The RSI varies between 0 and 100 as demonstrated in the figure above it. Typically, it is used in conjunction with a candlestick price chart. An asset's relative strength is computed by dividing its average gains over the previous 10 days by its average loss, assuming that the range is set to 10 days. Don't worry if that sounds hard. The chart takes care of the maths. What aspects of the RSI do traders check for? When the RSI rises above 70 or goes below 30, these are the most prominent signs that traders watch for. An asset may be overbought when its relative strength index, RSI, is above 70, indicating that the asset's upward price momentum is waning and may soon reverse. An asset may be oversold when its relative strength index, RSI, is less than 30, which indicates that its declining momentum is slowing and may soon reverse. It's critical to understand that being overbought or oversold does not always indicate that a transaction should be made. All it indicates is that an asset's momentum, whether positive or negative, may be slowing down and may even be about to reverse, based on this one statistic. For instance, during uptrends, Bitcoin has traditionally maintained RSI levels far into overbought area for months at a time. In fact, some traders interpret overbought RSI figures on BTC as an indication that the market will continue to rise. One method that expert traders use to see trends and possible opportunities is to understand what the RSI might signify for a given asset or set of market conditions. But always keep in mind that experienced traders almost never rely on just one indicator, and that past performance does not guarantee future outcomes. Consult a reputable professional advisor if you're unsure about the best trading technique for you. Revenue above the $826 million average expectation of experts surveyed by Bloomberg, up 51% to $953.8 million. Coinbase said in a shareholder letter on Thursday that its net income for the previous year was $273 million, or $1.04 per share, as opposed to a loss of $557 million or $2.46 the year before. Analysts had predicted a decline. Few people spark as much discussion and conjecture in the constantly changing world of cryptocurrencies as Donald Trump. The former U.S. president, well known for his influential and frequently divisive viewpoints, hasn't held back when sharing his thoughts on a variety of subjects, including the Bitcoin digital currency craze. Knowing Trump's position on Bitcoin is crucial for investors, fans, and observers alike as we traverse the complexity of financial innovation and political power. Donald Trump, a personification of politics and commerce, has shaped American culture in a way that is distinct from others. Prior to taking office in 2016, Trump was primarily recognized as a television personality and real estate tycoon. During his time as the 45th President of the United States, he implemented a number of firsts and unusual policies that frequently caused division among the public. Trump's impact is felt in areas other than traditional politics, such as social discourse, economic markets, and most significantly, the emerging cryptocurrency industry. Bitcoin has experienced extreme fluctuations in recent years, leading investors to question its safety. The 2022 crypto market meltdown was influenced by factors such as exchange collapses, crackdowns, increased regulation, environmental concerns, security issues, and speculation-based prices. The UK's Financial Conduct Authority is cracking down on the cryptocurrency market, forcing investors to wait 24 hours after depositing money. This global trend of governments taking cryptocurrency risks more seriously may lead to a decline in investment as the market's profit potential declines. However, heightened regulation may ultimately reduce volatility and reduce fear of losing large amounts of money. Hope you liked the video. Please hit the bell icon so that you can stay tuned for upcoming videos, and don't forget to like, share, and subscribe to the channel. See you in the next video with another interesting topic.